Who is the pig of Meme Street, the Last Boys Club character, and why is everybody talking about him and so excited to get into this project called Fofar? Now, I've already done a video introducing this project, so I'll be sure to link that at the end of this video, but I'm here to do a price analysis of Fofar. It's been a while since I've spoken about this project on YouTube, and I've gotten some requests to do a price update video, so here we are. You can see Mr. Fofar. It's an absolutely unforgettable image over here. And just a reminder to you, this is crypto simulation theory. I'm the Gaussian Snick, and I do have a Telegram group called the Snick Pit for daily market updates, chart analysis, and what? and info about new projects. Okay, so there. That's what we do over there. Be sure to join my Telegram group. The link is in the video description. But let's get on with the chart. Nothing here is financial advice. You should please do your own research about this project and any project to talk about on this channel. It's your money, yours to do with what you please. What do you notice about this chart? Fofar wants to escape. I have drawn in this parabolic curve. I've refit it to the data that's here. Not by much, actually. This curve hasn't been changed much. We have our all-time high a little bit higher than what I have here. So like right around there. Just a little bit over 0.00004. And this is Fofar wrapped ETH. So this is a ratio of Ethereum. And we can see that we've just been kind of curving our way around, bouncing off of this parabolic trend line. Now you could argue that we have formed a cup right here, and maybe this is the handle to the cup. There's many different ways to look at a chart, but I think we can all agree on one thing, and that's this chart looks really, really bullish. So I have been holding Fofar as one of my Memecoin plays since around, I want to say, I actually don't even quite remember. I think I got into it in April. I made my video somewhere around here. You'd have to go back and look. You'll be able to see that at the end of this one. It doesn't really matter where I got in. I think I got in around, my average buys are probably around 3 million market cap if I had to guess. And Fofar currently boasts a market cap around 10 million. It's been hovering around like 9 to like, I think it got up to like 12 or 13 or something yesterday. Just somewhere in that ballpark. And if you think about meme coins with long-lasting value like Pepe, Andy, other ones that are inside the Boys Club collection, really, $10 million is not a lot. And proper altcoin season hasn't even begun yet. But point here is not for me to continue to talk about the history of Fofar. I want to get into some technical analysis, and let's see if the chart really is as bullish as it seems. Certainly at first glance it is. So I may need to pull up some lower time frames just because I don't have enough days to have something like a 50-day whole moving average. I may be able to have a 50-day. That may actually be possible. Certainly no 100-day, no 200-day. That's simply not going to happen. So we may have to work with lower time frame analogs to get a sense of how that's working. We'll look at risk, and we'll look at some other under the hood indicators to see kind of where this asset's at right now and where it might be going in the future. One of my benchmarks for whether a chart is bullish or bearish is the Gunnar EMA, which is a band of exponential moving averages. And you can see that we had a bullish crossover on the Gunnar EMA that happened on May 6th. It has not crossed bearish. It has not crossed bearish since, although it came really close to doing that at the end of May. In fact, I was worried it might actually do that. I mean, this was a pretty brutal downtrend to experience. But then we got some like massive buys that came in, which saved the Gunnar EMA from crossing bearish. And here we are again, coming back down to test it after 5 consecutive green days in a row. I mean, you're going to get corrections after something like that. That kind of move will bring about a correction. How deep will this go? Well, the good news is these candles, as you can see, we have a hammer candle right here, and then this candle doesn't have a very large underbody. It's got a nice big wick right here showing that there is some buying pressure. You can see there's some sells coming in right as I'm speaking. Every time there's sells, there's more buys. So I don't know where this correction is going to stop. I cannot predict that. I don't know if we're going to break structure here and come down and test some of these lower zones. But one thing you'll notice is that we have a very consistent pattern, for the most part, of higher lows and higher highs, although this is a lower high right now, but it's pretty close to the high that was here before, so it's nothing to really get concerned about. Anyways, that's just something to note. The Gunnar EMA band does look good. As I said, I can't get a lot of exponential moving I can't get a lot of whole moving averages here because of the fact that we just don't have a lot of data to work with. But the yellow one here is the 20-day whole moving average, or HMA. The blue is the 50-day whole moving average, HMA, and we actually are experiencing a golden cross right now of the 20 with the brand new 50, and look at where we're finding support. This is why moving averages are so important and why I love the whole moving average. Whole moving average, just as a reminder, is not as lagging as the simple moving average or exponential moving averages you're familiar with. So these two are crisscrossing in a golden cross, which is a bullish signal. Okay, there's no guarantee that that holds. It could come back down and turn into a death cross, but we have to go with what the data tells us, and the data is saying bullish right now with this golden cross. So again, we could go to lower time frames to see kind of what maybe is happening on a lower moving average time frame, like a 4-hour, and things get a little bit messy when you start going to a 4-hour. It's really not going to be my favorite time period to analyze because it's not going to give you a great idea of what's going on in a general sense. But you can see that on the 4-hour we did have a golden cross of its 100 with its 200, the 100 being in white, the 200 in red, and we had a death cross of the 20 with the 50. But I don't really pay too much attention to this time frame. It's just not as meaningful as a higher time frame. If I were to go to a weekly time frame, I would lose all of this data. I wouldn't really have anything that I could look at. So I'm just going to return to the daily time frame. But I at least wanted to show that to you, as I said that I would, so you can kind of see what's going on. But I value this a lot more. What about weighted logarithmic Bollinger Bands? Do we have enough data for that? Let's find out. Okay, I took the curve off because it's distracting. But yes, we have enough data for weighted logarithmic Bollinger Bands. And you can see we had a very clear uptrend throughout most of May, and then we came down to touch the lower part of the weighted logarithmic Bollinger Band, and then we bounced right off of it again, and we may be coming down to test that median line. It's possible. I can't predict what's going to happen, but at the very least, test that. This is our green Gaussian channel, which has been starting to tighten, which is a good thing. We don't want to see it super wide. A wide downside like this is not a great thing. So seeing it kind of like close in is exactly what we want. We want to see that volatility start to contract. We want to see things start to tighten and a big move start to emerge. So I don't see a big move happening like right away, right? Because the Bollinger Bands aren't very tight right now. They're not in a tight squeeze. Generally, that's what you want to see happen, is you want to see the volatility start to diminish and you get like this really tight trading range. We're not seeing that right now, at least that we know of. It does not mean that Fofar can't shoot to the moon and put in a new all-time high tomorrow. It certainly could. Anything is possible. But yeah, I mean, this is all very bullish though, like what we're seeing here. We bounced off the green Gaussian channel. We held it as support. We're getting further and further away from the interior of the Gaussian channel, so it's possible we don't even make it down there this time. And if we do, maybe just be a brief touch on the top, which I'm not sure we'll get to. So the median line of the Gaussian, of the weighted logarithmic Bollinger Band is like 0.00018, and I've already seen quite a battle happening at 0.00002. So could it get below 0.0002 again? Yeah, it's possible. Anything is possible. We could see a more material correction after 5 green candles, or we could just see it tap here and just continue going up and maybe test this all-time high for the 3rd time. Maybe 3rd time would be a charm. Okay, this is known as an average sentiment oscillator, and the way that this works is that when the green is diverging away from the red and the green is on top of the red, that's bullish. When the red is diverging away from the green and the red is on top of the green, that's bearish. you can see there was a period in Fofar's early history that was quite bearish, and that soon changed, in early May, and Fofar went on a very bullish run that lasted all the way till right here, which was around May 20th. And then it had a little bit of a bearish moment, right? It had a correction. In fact, that correction was around, sorry, I'm trying to get it, that was about an 81% correction. That's a pretty substantial correction, not abnormal at all for a meme coin to do that. So that was major enough to trigger a little bit of red on the ASO, but then look what happened. On June 3rd, which is just yesterday, we actually had a bullish cross on the average sentiment oscillator. Now the bullishness started earlier. You can see anytime you get the green moving up and the red moving down, that is bullish, whereas when red is moving up and green is moving down, that's bearish. So you don't have to wait for the cross, but generally getting into a cross is a good thing. So we want to see if this holds or not. It's obviously curling over a little bit with some of this correcting, but who knows, maybe we get one more red candle and then we get a green one, or we can get a green indecisive and we just head right back up. Like, there's no guarantee, for those of you who are waiting on the sidelines, that we are going to come back to these levels and put in a double bottom. We very well may put in a higher low, as we've been doing for quite some time. So just be careful when trying to time entries, not to get too cute or too greedy about it. You can always DCA instead of lump summing all your money in at once if you think that Fofar might go a little bit lower. But this is bullish divergence right now, and that's exactly what we want to see, and we want to see that continue. Okay, the ADX and DI is showing something a little bit interesting. So just to remind you, if you're not familiar with this indicator, the green line is the green directional index, which is associated with bullishness. The red directional index is associated with bearishness. When green is on top of red, that is generally a bullish sign in general. The white line is the ADX, which is the average directional index, and this gives you an idea of the trend strength. So when we have green diverging from red, that's bullish. When green is converging towards red, that's bearish. And should red and green cross over, then you start to get into some more sustained bearish momentum. So the good news is we have yet to have a bearish crossover on the ADX and DI. It's never happened. Trend strength is actually still fairly strong. It's been dropping. It's around 55. This is to be expected with any asset. You're going to get diminishing behavior up to a point until some kind of trend change, and then maybe it explodes out after some consolidation. This also does not mean that this asset's incapable of having an explosive move. It certainly is. This is a daily time frame. These are more volatile than the weeklies or monthlies, which would be monthly would be useless to look at. We have had a declining bullish trend, though. That is definitely the case. But then notice what happened. We almost had a bearish crossover, and this was on May 29th. But we got some bullish divergence. We had a little bit of bearishness here, bullish divergence. We're seeing a little bit of bearishness. So the question is, did this mark a change in trend? You can see the ADX kind of curling around. So are we setting up for a much larger move? That's what I'm wondering. I'm thinking there's a chance of that, but we have also been putting in a series of lower highs on the green DI, so I can't ignore that either. So I need to see a higher high print on the green DI to confirm a change in trend, and that the jaws of the ADX of the DIs are going to be opening up, allowing for continued bullishness. So this is I have a little bit of concern here, but not like in a serious kind of way, because there's still a lot of room to work with. I really like how this diverged away from the red, but seeing it come back in is not fun. But let's see where this goes in the next few days, and we can kind of draw some conclusions from there. I can't really get much data for a bull-bear power trend other than to say the bulls are still in control, but they are losing control at the moment. That doesn't mean this can't bounce, but the bulls only started to become in control, like truly in control, in June, according to this. I think this drop off from the initial high down here caused the bears to be in control for quite some time. So I don't know, take this data with a grain of salt, because the bull bear power trend on a daily time frame is probably not the most reliable time frame to look at. Maybe if I pull up like a 6-hour time frame, you can get, yeah, I mean, this is probably a more accurate picture, but then it's like, all right, it's 6-hour time frame, so it's not really anything you can draw great inferences from. So I have to go back to the daily and just acknowledge that the bull bear power trend isn't the best indicator to use on such a low time frame with such little data. Here's again one of my favorite indicators of all time, the price momentum oscillator. You can see that we reached, and again, this is on a daily time frame, so this is on like a 2-week time frame, you don't often get up into this region. But on a daily time frame, this is not, as unusual. So we are at a level of about 80.21 on May 18th. That's when we tested our all-time high but failed. And we formed sort of like a head and shoulders formation. As you can see, the left shoulder was like May 8th, the head again around May 18th, the right shoulder around May 23rd. And that led to a plunge in price momentum. Price momentum flipped red, but we flipped it green, but we are back testing that, or we are trying to hold that green line as support. So if we drop further in the next few days, this will flip it red again. And so we're at a very critical juncture at this point. I think that's clear from the price momentum oscillator. Now what I'd be kind of curious to look at is probably, MACD and RSI, and kind of see what those are telling us. Okay, the MACD had a very clear green mountain, and then it had a bearish cross on May 25th. And then we had a red mountain and a bullish divergence that happened on June 2nd. We are currently printing a light green, but that doesn't mean anything. You can see that the moving average difference, these are the difference of the 26-day, and I think it's like the 26 and the 12-day, and that's what the blue line represents. I always forget exactly the numbers. This is the signal line, and you can see that the signal line and the moving average difference line are pretty far apart. So yeah, I mean, those still look really good. There's still some room to play around here. We could get another light green day or two, and it doesn't necessarily have to mean that we're gonna, signal a bearish cross. Okay, the Snavel RSI has spent a lot of time above the red line just to show you what a strong asset Fofar has been. Most recently doing it yet again, but printing a lower high. So we are coming down below the moving average line of the RSI. So, as long as we can stay above 50, that's good. We did print around 30. We actually have never visited the green zone. At some point, this asset will have to visit that green zone and become very oversold, but we've been mainly overbought, although this was a really nice break. Believe me, this made a difference in risk too. So I don't know if this is about to roll back over or what exactly is going to happen. I'm not enjoying seeing this cross down, but we can see there's been plenty of times where it crosses down only to come back up. So it doesn't have to be dramatic. There's no guarantee that it won't be, but it certainly does not have to be. You guys know how much I love the Trix bubble, and the Trix bubble, nothing to be concerned about at the moment, right? Just a little bit of a kink in the lower time frame 5-day SMA, and everything else is turned up, or relatively turned up. So could this be the start of a bigger move, or are we coming back down again before we head up? I don't know. I honestly don't know. We could come down, touch, and then go back up. Like, there's all kinds of ways this can go, but we are above the zero line, which is a good place to be. We were below it at the end of May, and that was kind of a scary moment. Hasn't happened often, right? In Fofar's short history, it happened about a month before that. So we've already been down in this region. There's no guarantee that we avoid it, but it doesn't mean, we don't have to go back down there. So we have a bullish cross on all the moving averages that just kind of happened today. So let's see if we get some follow through and we break our all-time high really soon. This setup actually looks pretty good. We'll see how that ages, but you know, I'm not too concerned yet about this kink. The unbalanced volume, or OBV, looks very healthy for this chart. Like what I see here, a little bit of consolidation in this region, but you know, that's perfectly normal behavior. There's absolutely nothing concerning to see here. Relative volatility index looks really good. You can see here that this, I don't know what this pattern would exactly be called. I'm not great at names of things, but you can see this sort of this descending channel here. Popped out of that, had some volatility recently. We're coming back down. You know, my gut feeling is we head back up again. So, of course, I'm biased. I hold this asset. No, but really, that's kind of my feel. Is that what kind of would make sense here is to have a little bit of a bounce in volatility. But we'll see, right? We'll see. Wave trend oscillator looks really healthy. We did pop up into the red region, and we had to come down after that, and now it looks like we're coming back up and cresting a little bit here. Not really what I want to see, but you know, we haven't turned red. We haven't flipped this around. We're not coming down yet. We're close, right? There's not much further to go. So tomorrow's price action is going to be very influential over where the wave trend goes from there, and you know, whether this is the beginning of another downtrend or if this is just a little bit of cooling off after, you know, pretty much straight up for 5 days. So what's the risk of DCAing Fofar right now? And if you have money set aside and you wanted to buy this asset, is it a good time? So this is my beam risk indicator that I look at for assets, okay? And you can adjust this time frame. You know, I have it set to the daily time frame right now, but the beam actually works best with a lot of data, so I'm probably going to pull it back to the 4 hour. Just in this situation, that can actually work out quite well. You can see we actually triggered some of the deepest reds on the 4 hour on the 20th of May. But anyway, if we zoom in, you know, and we can look at the other time frames. We can look at we can go back to the daily as well. We can see that the best time to DCA Fofar and to get into it was obviously kind of in the beginning, right, when it was in decline. But nobody really likes a stuck pig, right? And everybody wants to get in up here. We had a really good cool off period that a lot of people missed. This ended on May 29th. So, and then we came back up to like the 0.5 level. Currently, it looks like we're about to head down to around 0.4. So 0.4 region. So the maximum risk on this model is not really 1. You can actually go over 1. I've seen assets go to like 1.2. But generally, the closer you are to 1, the more likely it is that your asset is overbought. And the closer you are to 0, the more likely it is your asset is oversold. So if we go to the daily, it doesn't look that different. It's a little cleaned up, right? You can see that we're pretty much right at 0.4 risk. So if, you know, I already have all the Fofar that I want. I'm not really buying any more. I'm not planning on buying any more. That would change, of course, if we were to come down below 0 or something. I probably would want to buy more, but you know, it's a dangerous waiting game. So this is sort of like what I would do. If you want to get into this asset and you think there's a chance we're going back up right now, which is possible, I don't know. I have no clue what's going to happen next. Nobody does, right? It's just a game of probabilities. But if you believe we are going to go back up, you may want to open a small position here just so you have something, right? But then what you could say is, okay, if we drop further and maybe we head down to like 0.3 or something, I'll double my amount. If we go down to 0.2, then maybe I'll triple that amount. Something like that could work out, right? Because otherwise you're taking if you lump sum right here, the only way it's going to work out for you, in the short term at least, is if we curl back up here and we like breach through here. And then you'll probably make some good short-term profit. So I guess the question is, like, what is your vision, long-term or short-term? Like, if we go to like, usually I don't do beam on the daily. Like, that's not a very, you know, we're in here for the long haul. If we go to a weekly time frame, you can see, if we're considering this in terms of weeks, the risk is still pretty low, right? So if you're thinking kind of like a bigger picture, that this asset clearly has a lot longer way to go. But yeah, I mean, we put a lower high in on the beam. We're now sitting on the weekly risk around 0.27. So everything is above sort of the deep value zone, which is, anything in here underneath 0.2. You're going to, at some point, Fofar will come back down there again, but the price could be higher than what it is now when it does that. Or it could head down that way right now for all we know. And by mid-June, we could be in deep value again. So there's just really no guarantee and no way to know when that's going to happen, which is why I would not buy an asset that's up here in the red zone. Absolutely not. I would not buy right here. Then you're setting yourself up for, at least a short-term loss. I probably would not buy here either. But as we start to get below yellow, or even in this like yellow to gray area, I could see an argument made for making some small buys here, making larger buys in here, and very large buys once we get down here. Somebody saw the value. We didn't even have to go all the way down. We were down at like 0.1 risk on the daily, and somebody just shoved, I think, like 150K on 2 separate orders into Fofar. I watched it happen live, and I was just like dumbfounded. Like, who the heck has that kind of money to just toss at a meme coin? But clearly their conviction in this asset was great enough, and you can see that for yourself. Go to dextools and go look at the buys from I don't know, was it, I'm trying to remember which day of the week it was. It was last week. I believe it was on, let me think. I think that it was on Sunday night heading in. So it was like Monday morning Pacific Daylight Time. So you'll have to translate that to UTC. Last Monday, so like a week ago. Go look at that date, and you'll be able to see those gigantic buys that came in. So clearly people are aware of this value zone, and they will defend it. So that's why I think a dynamic DCA approach probably makes the most sense, where you don't ape in or anything, but you at least have some skin in the game in case it takes off without you. You don't have to feel like you missed out, because you don't want to be then FOMOing in at higher prices. That's generally not a great way to approach collecting an asset. Another one of my favorite indicators is the oscillator volume profile trendoscope for the money flow index. And you can see that Fofar was very oversold on May 1st, very overbought. In fact, put in a double top of overbought May 8th, and it looks like May 18th. And we came down to getting close to oversold, although we put in a higher low. Looks like about June 1st, right? So, and then we bounced pretty hard, and we are in no man's land right now. We're literally in between overbought and oversold. So really anything could happen here. We could just, dive back down, do a double bottom, or we could just kind of make our way back up gradually towards overbought, or just spend some time in the sandbox. You really don't know which direction these things are going to go, but I can at least tell you we are neither overbought nor oversold at the moment. So it's another sort of risk indicator. You generally don't want to be buying when we're overbought. The best time to buy is when we're oversold, but it's like, if you wait for us to be oversold again, what the definition of oversold is could change, right? The price could be higher than it is now, and it could be oversold, because if we were to rally off to a new all-time high, and whatever that is, like 0.0001 or something, I mean, I think there's a high chance we probably will get rejected. If that happens somewhere higher, people are going to start taking profits, but some move like that could throw us back into oversold. But who knows, oversold at that point could be somewhere down in here. You just never know. Or it could even be possibly shoot up really high, and an oversold could be the current prices. So I don't know. I have no way of knowing. I mean, you can see that it was quite some time, May 1st to June 1st. The whole month had elapsed between oversold and oversold, according to the MFI oscillator volume profile, which this is actually fairly reliable index. I love using it. It really gives you a great idea of if it's a good time to buy or not. So neutral right now. Neutral means, in my opinion, if I'm coming into an asset, I'm going to be dynamically DCing. I'm not going to lump sum. I'm going to throw a little bit in and wait and see what happens next. And I'm not going to chase green candles, right? If you throw a little bit in and it starts pumping, you know, you can put more in, but should you? You're in a pump, right? You might want to, I mean, you could put in less, right? But you may be like, well, hey, I've got skin in the game. You've got pig skin in the game, right? So, yeah, are those like chicharrones or something? So yeah, anyways, chart looks good. It's neutral. It's neutral on beam risk. It's neutral on money flow index. Looks fairly neutral on RSI. So if you have not had a chance to enter into this asset, now is certainly not the worst time. And you are welcome to wait and see what happens. And maybe you get a better entry tomorrow or the next day. But it's so neutral looking that really it could go either way. This is a tough spot to be in, especially if this is the handle to a cup. This could be a cup and this could be a handle. The handle completes, we blast off. That's like probably like one of the most bullish chart formations you can possibly have. So yeah, we'll just have to see what happens in the next few days and how this video ages. Thank you for joining me in the crypto simulation. Once again, I'm the Gaussian Snick. Another thing I've gone over here is financial advice. I will link you to more information about Fofar. And you should see a video pop up here pretty soon. My first video on Fofar. I think the first video ever done on this asset. So check it out if you want to learn more about the project. And join my Telegram group, the Snack Pit, for daily market updates, chart analyses, and info about new projects. Or if you have any questions for me, you can certainly do that there. Or you can leave a comment in the video description or below, wherever you can do comments. Like and share, subscribe to this channel, and be sure to hit the notification bell to be notified of future videos. Thank you so much for checking out Fofar and looking at our awesome chart. And as a reminder, I do own this project, so that's something you should also keep in mind. See you next time. Have a great rest of your day. Bye.